Before we dive into today's episode, I want to share something I'm deeply passionate about, a project that represents my life's work in investment analysis and education. After spending decades on Wall Street, where I was fortunate enough to be ranked as a number one ranked analyst by Institutional Investor 10 times, I recognized a critical gap in investment education. I saw how valuable institutional level investment insights could be for individual investors if presented in the right way. That's why I created Insight One. This platform embodies everything I've learned throughout my career, combined with cutting-edge technology to make these insights accessible and actionable for everyone. What makes Insight One unique is that it's not just another investment app. It's a carefully curated educational experience that brings you the same level of analysis and understanding that I've provided to major financial institutions throughout my career. But I've always believed that successful investing comes from deep understanding, not just following tips or trends. Through Insight One, I'm sharing the analytical frameworks, market insights, and investment principles that have guided my work for decades. The platform represents my commitment to democratizing high-level investment education and making institutional quality analysis available to individual investors. Now, let's get started with today's episode, where we'll explore some of these concepts in detail. European telecoms, a sinking ship, or the next big investment opportunity. Today, we're diving into an industry that's been struggling for years, but might just be on the verge of a major turnaround. I'm joined here today by my co-host, Hope.
Thanks, Jeff. It's always nice to be here with you to chat through these issues. That's an intriguing opening. What's got you thinking there might be a change on the horizon?
Well, it's a combination of factors. For years, European telecom companies have been caught in what industry insiders call a value trap. It's like they're running on a treadmill that's getting faster and faster, but they're not getting anywhere. These companies, like Vodafone, need to keep investing in new technology to stay competitive. But here's the kicker. They're not making enough money to cover these investments.
So it's like they're stuck between a rock and a hard place. They need to invest to stay relevant, but they can't make enough profit to fund those investments. How did they end up in this situation?
It's all about competition. The European telecom market is so fiercely competitive that prices have been driven down to rock bottom. Great for consumers in the short term, but potentially disastrous in the long run. Think about it. If these companies can't make money, they can't invest in improving their networks. And that means we all suffer in the end with poorer service.
I see. So what have these companies been doing to try and solve this problem?
Well, many thought merging was the answer. Join forces to cut costs and increase profits. But here's where it gets interesting. These mergers haven't really worked out either. Every time these companies try to merge, antitrust authorities step in. They're worried about monopolies forming and hurting consumers. So they impose these really tough conditions on mergers that end up negating a lot of the benefits.
Oh, that sounds like a catch-22. They can't make money on their own, but they're not allowed to join forces either. How has this affected their performance in the stock market?
It's been pretty grim. The European Telecom Stock 600 index, which tracks the performance of telecom stocks, is down 6% over the past 5 years. That's a clear sign that investors aren't too optimistic about the industry's prospects. It's especially striking when you consider how much our reliance on telecommunications has grown during that same period.
You're right, with remote work and streaming services becoming more common, you'd think telecom stocks would be booming. Is there any hope on the horizon for this industry?
Actually, there is. We're starting to see some signs that things could be changing for the better. Let's talk about the recent merger between Vodafone and 3UK. This is a big deal because the UK's Competition and Markets Authority approved it without imposing any major asset sales. That's pretty unusual and could signal a shift in how regulators are approaching these mergers.
That does sound promising. What kind of impact is this expected to have?
Well, Vodafone is expecting to save about £700 million in costs and investments. That could be enough to lift their return on capital from the basement to something that actually makes financial sense. But it's not just good news for Vodafone. This decision might signal a shift in how competition authorities are thinking about these mergers more broadly.
So are regulators starting to see things differently?
It seems that way. They appear to be putting more emphasis on encouraging investment in new technologies like 5G, rather than just focusing on maintaining a certain number of competitors in the market. In fact, this ties into a recent report on EU competitiveness by Mario Draghi, the former head of the European Central Bank. He's calling on regulators to focus more on getting companies to commit to investing in networks rather than forcing them to sell off assets.
That's interesting. It sounds like there's a growing recognition that squeezing these companies too hard might be counterproductive in the long run.
Exactly. It's like the authorities are finally realizing that if they squeeze these companies too hard, there won't be any juice left for innovation and improvement. But let's not get ahead of ourselves. There are still some big challenges to overcome. Take Italy, for example. The competition there is so intense that it's been described as cutthroat. That's not a situation that's going to improve overnight.
I can imagine. So even if regulators ease up a bit, the market dynamics in some countries might still make it tough for telecom companies to thrive. Are there any other factors complicating the situation?
Absolutely. Even in markets where things do improve, there's no guarantee that the benefits will last. In the UK, for instance, a lot of the competitive pressure comes from what are called mobile virtual network operators, or MVNOs. These are companies like Sky that don't own their own network infrastructure, but instead piggyback on other companies' networks. They can offer really competitive deals because they don't have the same overhead costs.
So, how are investors viewing all of this? Are they optimistic about the future of European telecoms?
Well, if we look at current stock valuations, it seems investors are still pretty pessimistic. European telecom stocks are trading at pretty low valuations right now. Vodafone, for instance, is trading at less than 10 times forward earnings. Orange is even lower at below 9. These are some pretty gloomy numbers. It's like investors are saying, we don't believe this industry can grow or even maintain its current profits.
That does sound pessimistic. But couldn't that also represent an opportunity for investors who think the industry might turn around?
You're spot on. That pessimism could indeed represent an opportunity. If we start to see signs that the market structure is improving, less cutthroat competition, more emphasis on investment, these stocks could be poised for a significant rebound. It's definitely something to keep an eye on. And it's not just about making money on stocks. The health of the telecom industry has real implications for all of us who rely on our phones and internet every day.
That's a great point. It's easy to forget how much we depend on these services until something goes wrong. So what should our listeners be looking out for if they want to stay informed about this issue?
Great question. For those of us who aren't in the telecom industry or investing in it, there are still some key things to watch. Keep an eye on your phone bills and the quality of your service. If we start seeing prices stabilize or even increase slightly, but also see improvements in network quality and speed, that could be a sign that the industry is finding a healthier balance.
Well, you've certainly given us a lot to think about. Any final thoughts on the European telecom industry before we wrap up?
I think the key takeaway is that this is an industry in flux, and the changes we're seeing could have far-reaching consequences. Whether you're an investor, a consumer, or just someone who cares about staying connected, it's worth paying attention to how this story unfolds. The decisions made by regulators and telecom companies in the coming years could shape the digital landscape for decades to come.
That's a great summary. It's clear that this isn't just about corporate profits or stock prices. It's about the infrastructure that underpins our increasingly digital lives.
Absolutely. And on that note, I think it's time we wrap up. Remember, whether it's telecom troubles or any other issue shaping our world, we'll be here to break it down for you. Until next time, keep your ears open and your phones charged. You never know when the next big story will break. I'm Jeff Robinson and I run theinvestmentanalyst.com. And I'd like to thank Hope for being here with me.
Thanks, Jeff. Always a pleasure.
It's been great having you all here listening to us today. Have a good rest of day, and we will see you soon.